For the past several months, I've been running AI trading systems with my capital, tracking results, comparing what different platforms actually produce versus what they claim to produce. And today I'm putting one of those on screen, walking through a live session from the beginning, and then talking about some things I think are genuinely worth understanding if you're trying to make rational decisions about where to allocate capital in crypto right now. Let's just get into it. So here's the platform live on my screen. I'm walking through the configuration first because the setup process is actually more informative than people realize about how seriously something was built. Going into LaunchBot here. Okay, it's open. So first I set my pair, and the depth of this asset list comes directly from the system architecture. It operates across multiple exchanges concurrently, so the token selection reflects that coverage. I choose BNB because it shows interesting spread behavior and decent volume across markets today. All right, here I select live mode, and then I add my receiving wallet address. Okay, next I define a budget allocation for the trading session, and next the setting I spend the most time thinking about when I configure a session. It controls the bot's trade selectivity, the minimum certainty threshold it requires before committing to a position. Higher, and it starts operating in conditions with more ambiguity. Lower, and it only takes the cleanest opportunities. And I'm keeping in mind here, quality over quantity is the approach that's produced the most consistent results for me. All right, last thing is strategy, the specific methodology for the system to apply when it's scanning for and acting on price discrepancies across markets. Okay, one final check across everything, nothing I'd change. Next step. So here the platform offers me full flexibility. I can choose any token I want, no conversion prep needed from me. The platform takes care of that on their end automatically. Okay, then I press I've sent. Good, system's launched. Right here on the dashboard, I can see everything happening, and honestly, it looks cleaner than a lot of things I've tested earlier. Now we watch the whole process. Session has run. I press stop right now. Stopped, and this screen is the full breakdown. Session length, trade volume, active strategy throughout, win rate, and the net profit with the platform commission already stripped out. Okay, I press withdraw, and now I have to wait a couple of minutes while the protocol processes the transaction. So let me cover why this approach specifically makes sense in the current market, because I think context matters here and most people skip past it. If you're manually trading right now, you're operating in a market that's unpredictable, driven heavily by institutional flows, and where most retail participants are consistently on the wrong side of those moves. The odds aren't great, and staking and yield farming have compressed significantly. Returns that looked attractive a couple of years ago have largely dried up as capital flooded in and protocols adjusted. What's left is either mediocre APY with locked capital or exposure to protocol risk that most people don't properly price. And automated systems sit in a completely different category from both of those. It doesn't require a directional bet on price, it doesn't care whether the market is up or down, it extracts returns from pricing inefficiencies that exist regardless of conditions. And those inefficiencies have actually grown over the past year as the number of exchanges has expanded and liquidity has fragmented further across them. More fragmentation means more gaps, and layering AI on top of that means those gaps can be captured consistently at scale across markets a manual process couldn't monitor simultaneously. From a pure risk-adjusted standpoint, given where the market is sitting right now, this is one of the more rational places to work with.